We are live. We are live. Thank you for joining, everybody. We are having a great time. We're going to talk about GameStop. We're going to talk about crypto. We're going to talk about meme coins. We're going to break down exactly what is happening with all the chicanery with GameStop, with the short sellers. We're going to talk about Bain Capital. We're going to talk about all these things, folks. And thank you for joining. I want to make sure we go ahead and get this tweet out there. Let's get all the people jumping in. Thank you for joining yet again. All right. I got the headphones on because we're going to play some videos, and I got a good breakdown of the Bain Capital, GameStop, short sellers, hedge funds. What does it all mean? What are the derivatives? You know, enlighten me, DZ. Tell me what's going on here, and I'm going to have all the answers. Thank you for joining, everybody. Make sure you go ahead and hit that like button on the way in, and we're just going to talk some crypto news, everybody. First, we got a couple memes. We got to look at the memes, everybody. First one I see is pretty hilarious. I'm going to go ahead and take this off. I'll put them in later. Everyone in crypto looking at the GameStop pump, especially Mark Zuckerberg. Let me know, are you on the sidelines? Show me the money. That's right. Here we have a really cool graphic that is just showing GameStop's share price. It's only 16 seconds. There's a little bit of music with it as well. Here we go. Looks like Bitcoin. Yeah, it looks like Bitcoin. Oh, really looks like Bitcoin. And then, boom, that's where we're at right now, folks. We're in the midst of a climb. What else do we have? Now we're seeing a little bit of funny business happening at the same time. Vanguard rejecting purchases of GameStop shares. What is going on? Now, this is just, a random account. It looks like an anon account, some white rabbit. But, a little bit telling that people are tweeting out, hey, I'm actually getting this rejected here. And it looks like same thing is happening with Cash App. Cash App does not control trading halt, so blaming the entities there. So it looks like the pauses are basically putting a pause on the buy pressure. And I think this is all they needed. The hedge funds just need a little bit of a pause, a little bit of a cooling down, a little bit of a pause on the buying pressure there, and you can see what is happening. You know what, folks? I swear to God, I almost just want to buy one GameStop share just for the culture. Pulling up my Robinhood app right now, and you know what? I am just going to buy one GME. I'm not trying to be a millionaire here, folks. GameStop. I'm just actually curious if we can buy it. Now it says, has a warning, elevated volatility, recently experienced elevated volatility. You may want to proceed with caution, it is telling me. So they're already trying to psychologically deter people from buying these shares. Now, I'm going to go ahead and see if I can just buy one share. It's $34. Let's go ahead and pull that $34 here, 74 cents. That's it. Oh, it's green screen. Oh, Robinhood has green. Okay, that makes a little sense there. Yeah, all the green buttons are just looking translucent. Okay, and we're going to got to make I've spent my excess cash. Oh, God. Wow, they're really really just making this a pain in the butt. Now, you know what? Boom. They gave me enough friction, and now I'm not going to buy one, folks. That's what I'm talking about when they're trying to shake you out, when they're trying to add this little bit of friction. And now that is just less buying pressure for this stock. Make it more likely that these hedge fund billionaires are going to get away with short selling this stock. Now, we got some stats here. How are you doing? Manawalk in the house. Truck Dano, Electric Crypto, Breeze. Appreciate everybody jumping in. Yesterday, GameStop ended the day with the 11th largest OCC hedge loan balance in the entire market. What the heck does that mean, DZ? OCC is created to clear and guarantee stock loan transactions between clearing members. So that's what the OCC essentially doing is, making sure these trades clear. And then they have the 11th largest balance in the entire market. Now, you got to remember, some companies are worth trillions of dollars. This is only worth about $15 billion. And so for them to be up there with Apple, I'm looking at the names right here, with Apple, with Microsoft, with NVIDIA, with Amazon, very, very insane that there's the amount that GME is posting up right now with the 11th. And now coming in with 10% of its market cap, also pretty crazy right there. And here you can see the percentage of market cap there. Am I covering? All right, GME, a little 10% right there. But look what it normally is. Now you got a couple like SPY puts. S&P 500. But Apple, 0.14%. Microsoft, 0.1%. NVIDIA, 0.1%. Amazon, less than 0.1%. And so we're seeing a little bit of shadiness. We're seeing shadiness in the clearinghouses. OPP, yeah, you know me. Now, we are going to look at Roaring Kitty, most recent tweet. Now, the more I see these, the more I'm starting to think we got a psyop on our hands. Because you got to ask yourself, where's the confirmation that this is Roaring Kitty? Now, I've heard, I haven't confirmed myself, he got verified in March. And so, maybe that is him, right? Now that it was verified. But he hasn't confirmed himself. And this almost makes me feel like it is a psyop. I'm like, oh, he released a video of himself. It is official.
Investors who had lost big on GameStop were looking for someone to blame. And Roaring Kitty was starting to look suspicious.
Shut up, bitch!
I mean, I honestly didn't know it did that with The Rock at the end. I actually played the 5 seconds when I did it earlier. But that was funny. All right, yeah. Is it him? Is it not him? Chat, let me know. Type in Y, type in N. Do you think Roaring Kitty is actually tweeting here? Or is it the Pete Davidson character? Is it his pothead brother? Is it a hacker? Is this a SIM card swap? Is it his wife? Who knows? Who knows what's happening here? Let me know. Me personally, I say I'm leaning towards him. Yeah, it is him, but by no means am I like 100% here. All right, now we're gonna do a good breakdown. This is a 10-minute video. We're gonna watch it. We're gonna break it down. We're gonna pause it a couple times. I got a couple tabs. We're gonna go on little deep dives, left turns, and we're gonna break down Ian Carroll's explanation of the criminal conspiracy that GameStop exposed. How and why short sellers could actually blow up the entire economy. They're not saying they're going to, hurt one hedge fund manager. No, they're saying this could be really bad. Now, folks, I did tweet out I was going to share a trade. I forgot to do it. I literally did this. Freaking A, man. I did this right before we went live. I swear I must have caught this candle right there. Yeah, so this was, does it have a time? I don't know if it has a time. I was going to just show you, how recently we got in this trade. So I opened a small long on Doge. We're not going crazy. I felt like a bottom is in. I'm going to move my stop loss into profit. We closed out the other long deep in profit. It actually was almost frustrating. I closed it at 15.22. I kid you not. I closed it at 15.22. That's where I had my profit. Look at that, 15.22. It looks like it went down to 15.21. Oh, wow, it actually doesn't go down to 15.21. I was the order book. I was that last order book that got closed. Okay, 15.21, 15.22. Yeah, I got stopped out to the thousandth of a penny. I literally called it to the thousandth of a penny, and now we're jumping back in the trade. So, we closed it out in profit. We're looking good. Now we're closing it in trade. All right, now let's do the breakdown, everybody. I'm sorry. I just want to let you know we are in a trade right now. We just jumped in. All right, we got people 50-50 split over ins and Ys. What about Andrew Tate? We'll look at an Andrew Tate tweet later. I know he's diamond handing as well. We have one theory here. It is Gary Busey. Gary Busey is actually tweeting. It is not Roaring Kitty. All right, now this is going to be just a explanation. Very, very good explanation. This is the best explanation you're going to see on the GameStop debacle. Connecting the billionaires, connecting the inside players, connecting Bain Capital, connecting everything. This is great.
So this homie said, "I can't believe this GameStop."
Oh, whoa, yeah. I was I was playing it to get all the links and everything. So I've watched this like 4 times at this point.
So this homie said, "I can't believe this GameStop thing is still going on. Can someone explain it to me? I love Ian and everything he stands for, but I literally have no idea what this is about or how one stock could have any real effect on impacting ultra wealthy people.
I hope his music doesn't strike
down
us.
to help. I just need to understand what's going on."
He just needs to understand. So that's what we're going to do now. We're going to understand what is going on. And like I said, we got a couple side turns.
Matt. I'm going to try to put it all into one video.
I got you because he's got you.
I've made lots of videos about pieces of this, but I'm going to try to actually explain the real thesis of what's going on and why GameStop very well could affect the entire market, bring down corrupt financial institutions on a big scale. But yeah, I got to put my hair up for this one. Okay. Don't get scared of charts. We're going to keep it really simple. When you buy stocks normally, you're buying scared of charts.
I feel like this is an attack. You know, DZ's not putting his hair
Dude,
up.
I got to put my hair up for this
God,
one.
I still got the Andrew Tate glasses. That's what
Okay.
we're talking.
Don't get scared of charts. We're going to keep it really simple. When you buy stocks normally, you're buying at a lower price and you're hoping it goes up so you can sell it and make some money, right? Well, there's no rule in the stock market that says you're not allowed to like borrow something from someone, right? So you're allowed to borrow shares from your homie. And if you borrow something, you're allowed to do what you want with it, right? Like I can borrow some shares and then sell them on the market right now. I just have to return them later to make sure that homie gets his shares back, right?
And so that's how short selling works. You got a lot of entities who have billions of dollars of a stock. They're not going to just move, you know, their Target stock or their Home Depot stock or their Microsoft stock, you know, off like a 2% fluctuation in price. Oh, we got to move. No, it's just too much money. They have too many billions tied up. And so they will loan out Microsoft shares, Tesla shares, or in this case, they'll loan out their millions of dollars of GameStop shares.
So you're allowed to do this thing called short selling where you borrow some shares from whoever right now and you sell them at the market right now, hoping actually the price will go down. And then later you'll buy some and return them to your homie. And you actually make money because you return them for less money than you actually made when you sold them in the first place.
And you rent them from your homie. Your homie is like, you know, charging you a little bit. So you borrow $100 worth of stock to give them back in 30 days, hoping, you know, I could sell it at 100, buy it back at 80, and I give it to him, and I made $20. Well, he's going to charge you a couple bucks. And so that's why your homie is willing to loan you these stocks. He's not going to sell the stocks anyway. So if he can loan them out to his homie and make a couple bucks, he will.
So short selling is this thing where you can bet the market will go down, and it's like taking out a loan, and when the market goes down, then you close out the loan and make some money.
Okay,
you have to pay a little interest to keep that
turn.
loan open, but you can make a lot of money doing that. Especially if you see a company that's like obviously going to die because it's a failing business model and you want to make some money while it dies. But you'd want to be really careful because if you have all these loans open and you're paying interest to keep your loans open, you're hoping the price goes down, but then it starts to go up a lot, you could lose a lot of money because you'd have to buy them all back at a higher price to pay back your loan, and you had to pay interest to keep your loan open. And prices can go up infinitely, theoretically. So short selling is pretty dangerous, and everyone knows that. And back in the 90s, all these rich people like at Bain Capital, like Mitt Romney, they realized that...
Wait a minute. Bain Capital. Now we're going to have our first left turn. I'm sorry, we had to go about 2 minutes into it. Bain Capital, American private investment firm based in Boston, Massachusetts, is made famous by Mitt Romney. When Mitt Romney ran for president, he had to divest himself from Bain Capital. Bain Capital, you know, hey, they invested in Staples. They invested in tons and tons of companies. But he's saying this situation where it's like, oh, these Bain Capital, they come in and, you know, they try to short it and they even try to, you know, maybe even kill the company from the inside. Well, why would they do that? Well, he's going to go in a deeper dive. I just wanted to highlight some other Bain Capital moves. The older viewers, hit the like button if you remember this one. KB Toys. Who remembers KB Toys? Mall-based retail toy stores. Founded in 1922. The company would be open for over 100 years if it was still open today. Well, what do you know? They're in financial trouble since the 90s, and they filed for bankruptcy. Bain. So Bain bought it for $305 million. So they put $300 million into it. All right. And so then they move forward. Hey, well, all of a sudden they started having a whole bunch of issues. Whoa, what are you talking about? You know, I'm losing money. Well, wait a minute. So Bain lost money, right? So Bain bought this company. Well, surely they lost money when the company filed for bankruptcy. You don't invest in a company, drive it to bankruptcy, and make money. Oh, that sounds evil. Well, wait a minute. Bain had been able to recover its value on its investment through a dividend recapitalization in 2003. When I hear dividend recapitalization 2003, I did not mean to click the link there. I'm just thinking, wait a minute. That just sounds like something complicated where you stole the money. Leverage recapitalization is a change of the company's capital structure, usually substitution of debt for equity. Oh, what do you know? It sounds like someone pilfered the candy jar. We keep scrolling here. Bain Capital. Toys R Us. They have stolen my childhood. Bain Capital stole my childhood. So they're also part of they paid $6.6 billion for this company, outbidding someone that was trying to pay $5.5 billion dollars. And then, you know, they ended up pilfering it from the inside, debt to leverage, or I'm sorry, equity to debt, leverage, derivatives, all these shady backroom deals. And next thing you know, Bain Capital making a whole tons of money. So Bain Capital, you know, that is maybe where you heard it from. So that's our little first aside right there. Then we're having another one on what naked short
They
selling
can
is.
actually take companies down from the inside and basically loot a company from the inside, take all its money, give it to them and their buddies, the shareholders, and then bankrupt it and leave. And there's not really any consequences. You just buy into the company, buy a bunch of shares, get yourself on the board, take it over, start hiring people that'll do what you want, mismanage it, do a bunch of buybacks so the money gets paid back out to you.
I'm gonna repeat that because
buy into the company.
This is the playbook right here.
Consequences. You just buy into the company, buy a bunch of shares, get yourself on the board, take it over, start hiring people that'll do what you want, mismanage it, do a bunch of buybacks so the money gets paid back out to you and the shareholder buddies, and you can really just mismanage the company into the ground and basically loot it for all its
7 steps to be a billionaire right there.
worth. And when it goes bankrupt, it's like, oh well, whoopsies, it was destined to fail. We'll just move on to the next company. Whatever, my mistake. And they made billions of dollars doing this to Toys R Us, and everyone else was looking around like, damn, that was a pretty solid strategy, Bain Capital. Maybe we could do that to some other companies. And this was just after the .com bubble happened, and so there was this whole internet thing.
All right, people are saying GME is going up. We're going to go ahead and take a live look. What is my favorites? Kronos Chains meme coin. I don't have one, so feel free to throw something in the chat here. I had GME pulled up. I want to make sure. Okay, I'm going to have to go ahead and do this one more again here. So GME stock. Let's go ahead and look at it. Someone's saying we are now bouncing. It looks like we got a little bit of a turnaround, folks. You know what? I'm going to go ahead and open up some trading view. Let's do a little TA on GME, and then we're going to jump back into the video there. Okay, so make sure you hit all. You don't want to be on some weird crypto version of GameStop that's trading at 2 a.m. You're like, wait, what? All right, this is the 10-minute chart. Let's go to the 25-minute chart. Yeah, it looks like a nice. Oh wow, folks. Oh wow. Do you see what I see? Yes, we see what you see. All right, I'm seeing a little bit of some support happening here, folks. So yeah, I would I could see this bounce being a real bounce. I could see this being an actual bounce. I don't know about God candles, but you know, I don't feel, it doesn't feel like this type of bounce here. It feels maybe more like a little bit of a sustained rally, maybe a consolidation with another leg up there. So yeah, GameStop is looking good at the moment. Let's just see. A few hours ago, down to 33. We're now up to 36 bucks. That's a whole lot for a stock, folks. All right, let's get back to the video here.
Amazon was on the rise, and everyone kind of realized, like, you know, there's all these retail stores out there that are probably in big trouble, like Blockbuster and Sears and GameStop, you know, companies that are bound to fail. So why don't we make them fail faster and profit off of that?
Yeah, they love what they did with KB. They love what they did with Toys R Us, and they started looking at other stores like GameStop.
Plus, it turns out that these dudes that work at places like Bain Capital that can take these places down from the inside out, turns out they have a lot of friends in the market that like to short sell. And the thing about supply and demand is when I'm borrowing like thousands and thousands and thousands of shares and selling them into the market right now, all that selling actually makes the price of the stock go down, because like when everyone's selling something, it gets valued less. But when everyone wants to buy something, the value goes up, right? So short selling actually makes a stock's price go down. And these guys realize that, like, you know, you like to make money when stocks go down, and I like to make money when companies get destroyed. And when we do those both at the same time, everybody wins. Except the company, of course. And then it turned out they were like, hey, we both know a lot of people in the mainstream media that like to report on failing companies. You know, the kinds of reports that make investors scared and make them want to sell a stock. And they realized they kind of had the dream team for bankrupting companies, and they could all make money on the way down and no one would ever stop them because it's kind of legal. And it actually started to work so well that they started to get really greedy. And they started to naked short sell, which means like no one's checking if we're even borrowing these shares that we're borrowing in order to short sell. So why even borrow them? We can just short sell shares and say we borrowed them, and the company's going to go bankrupt anyways. And when it does go bankrupt, we don't even need to pay that loan back because there's no shares to give back. They're gone.
That sounds a little bit funny, eh?
Fun fact, it's all tax-free money too, because there's no company to, the shares are gone. Free money. So some of them got really greedy and started selling without even borrowing the shares in the first place. But we'll come back to that in just...
I didn't even really think of that aspect of it as far as, you know, you short it down to nothing, you make the company file for bankruptcy. Now when you borrow those shares for $100, instead of having to pay your buddy $80 3 months later, the shares are worth nothing. You're handing them pieces of paper that are just blank. Now he brings up short selling here. And so looking at naked short selling, everybody, naked short selling is illegal. It's fine, folks. They can't short shares that they don't have. But wait a minute, I started pulling on the thread here. Well, they say it's illegal in the U.S., many other jurisdictions. The SEC banned it after the 2000-2008 financial crisis, after the great financial crisis. Before it, they had implemented and amended its regulation to close the loopholes that allowed some, aka BlackRock, JP Morgan, allowed their favored players to engage in naked short selling. They now require the publication of lists that track stocks with unusually high trends and FTD shares. What the heck is FTD? Failure to deliver. Meaning, you know, like, well, they never gave it back in 3 months, you know. In fact, it never traded hands there. They're just saying they're shorting it on paper. They can say, well, why is it illegal? Well, market manipulation, fraud, and financial risk. Okay, well, there's a long history of it. It looks like it was actually involved in the tulip bubble. It seems like shorting is a lot of times it's a good thing in a market, though. But more recently, naked short selling was partially blamed for GameStop in 2021. Well, wait a minute. I thought it was illegal. I thought you guys made it illegal in 2007. And yet here you are saying it was happening in 2021. Well, what the heck? Well, okay. In 2010, they adopted an uptick rule designed to restrict short selling from further driving down the price. Essentially, it's meant to prevent sales on shorts of stocks that have dropped more than 10%. Let me give you the DZ breakdown. This is what you're not seeing. This is what you're not reading. Some of you folks are smart enough to see it. I know we got a smart chat here. Some of you already saw it immediately. So they adopted a rule designed to make it illegal? No. Designed to ban? No. Designed to restrict. Designed to make it where only, they're lifting the moat where only a handful of the shadow cabal can engage in this naked short selling, aka the big billionaire hedge fund managers. Do you think BlackRock is restricted? No, of course not. But are you restricted from, say, doing it on Robinhood? Are you restricted if you're a small family office, a consortium of dentists that, pull together some millions and you're trying to invest your funds? No, they aren't restricted. They are restricted, however, but JP Morgan, Goldman Sachs, BlackRock, Vanguard, so when I see restrict, to me, that just means legally allow certain players. So they designed it to legally allow the elite players to short sell. However, the rules for you and me, no, we're done. All right, now let's keep watching here. Yeah, I really wanted to point that out. It really pisses me off more than anything.
Because the other thing that's important to realize about the stock market is it's like this big casino game now. So it's not like the big boys aren't just playing with like a share of a company. They're playing with these things that are called derivatives, which is like leveraging your assets to take out loans to like make big plays, big gambles. So they use all these special kinds of contracts where like they put up collateral in order for their bank or whoever to let them trade on a whole bunch of extra money they don't really have, but they've got collateral. So if it starts to go sideways, the bank can just take their collateral and it's all safe. But like this way, I can trade with 100 times the money of what I actually have. It's called leverage. And all these different tricks, they're called derivatives. And they let these big players gamble with huge positions in the market. And so this now, when the stock moves by $1, they're leveraged 100x. And so if the stock goes up by $1, they can make like 100x.
Or lose 100x.
$1. Or if the stock goes down,
I forgot you was going to say it.
And this derivatives market has gotten really big. Like hundreds of trillions of dollars worth of these weird
Hundreds
bets just
of
all
trillions.
over the market. These are the top banks. It's like JP Morgan, Goldman Sachs.
All right, so update, he says JP Morgan, number one, 49 trillion. So this is 49 million. So these are in millions of dollars. And so when you see a 2, that doesn't mean $2, that means $2 million. So $49 trillion. Well, folks, I pulled on this thread as well. And what do you know? What did I found? JP Morgan, it's actually it's roughly 20% higher today. Now, this is from January 30th, 2024. This is the end of that, I think, Q4 reporting for 2023. $58 trillion. So that's January 30th, February, March, April. I don't know if, there was something from May 30th. I couldn't find anything on May 30th there. But yeah, 58. So it's actually not even 49 trillion. It is a lot higher. After this, we're going to... This is really starting to expose what the elites are doing.
Names are over there, and this is in millions of dollars. So
are those like options? That is exactly what it is. It's kind of like a leverage. Leverage is leverage. So at the end of the day, you call it an option, you can call it a derivative, you can call it a leverage trade. When you're trading, if it moves $1, but you gain $50 or you lost $50, it's all essentially the same thing.
We're talking $49 million. That is $49 trillion worth of these derivative bets open with just JP Morgan, the biggest bank. But the thing about these derivatives is they all have collateral backing them up, right? And the thing they use for collateral, they're not like you and me. It's not like they're putting up their car for collateral. They're putting up their other assets. So over here, they're going to be trading these assets on that collateral. And over here, they're trading the collateral on these assets. And so the whole market is now tied together by all these big financial institutions trading trillions of dollars worth of stocks that they don't actually have on leverage that's based on collateral that they're trading for trillions of dollars worth of stock over there. You see what I mean? So like if they fuck this one up, then that one gets fucked. There's all these dudes doing this like kind of criminal shorting businesses out of existence scheme in the market, kind of in secret. And they've been targeting GameStop for years now. Ever since 2014, the stock was on this endless ramp down. They were short selling it while they had infiltrated it and were mismanaging the company from the inside out. Amazon was licking its lips, ready to take over the video game online industry.
All right, first of all, how evil is that? You buy a company, I'm just throwing out a number, like KB, you buy it for $300 million. You drive it to the point where it's worth nothing. It's worthless. And so your $300 billion, why shouldn't it be worth $0? Why do you end up exiting with 400? It just doesn't make any sense, and it's clear corruption, and our SEC is supposed to protect us, but they're glad handing. They're slapping these guys on the back. They're high-fiving is what they're doing.
And the people doing all this short selling also have all these other crazy bets open all over the market, and if any of them go wrong, a whole lot of things go wrong. And then out of nowhere, this random dude that would like live stream to 4 people about his investment thesis noticed that GameStop had a lot of short sellers, and it wasn't necessarily a bad company. In fact, it had a future if it turned around. And then this really savvy businessman came and took over the company and started turning it around. And he kicked out all the bad people that had been trying to mismanage it to death. And suddenly, all the people that had just spent years and years short selling millions and millions of shares, and all those loans were still open because they were expecting it to go to 0 and they wouldn't have to pay them back. Suddenly, the price is going up, and they're all in trouble.
And that was Ken Griffith.
Because the thing is, when the price goes up, and one of the other people that's short selling the company gets scared and closes out their trades, they have to buy all those shares back to get out of that. Right? Because they borrowed and sold, so now I have to buy and give them back. But all that buying makes the price go up even higher. And there were a lot of people short selling this thing. And in fact, they had short sold it so much that they couldn't afford to buy it all back once the price started going up that high. I mean, it was down to like 50 cents. And they were opening short sales at 50 cents. Today we're at what, $60 times millions and millions and millions of shares that you have to buy back? Each one will make the price go up. And the whole stock market is tied together by all these crazy financial derivatives, and everyone's balance sheets are actually kind of sketchy in the first place. Yeah, and we all realize that all we have to do is buy the shares and just hold on to them because these guys need to buy them from us in order to close their trades out. Whoopsies.
Evil.
And the more we thought about it, the more we realized, no, I don't really want to sell. Fuck you. So then they tried to trick us into thinking that they had already closed their positions and it was all over. And we were like, I'm pretty sure you're lying, dude. So we just held on for years. And it turns out we were right. Shorts never closed. And now we've all got the shares that they need in order to close. And you know, I still don't want to sell. Fuck you.
Boom. Moose Dak said it, really echoing his viewpoints. Be glad for the apes. Don't get effed by corruption. Some people held for 3 years just for the price action that we're seeing this week. So jumps in Robinhood to say big money and stops the buying. That is right. In fact, you know, you've seen that they are halting it left and right. It's just pure corruption right in front of our eyes.
So this homie said,
hey, hush, I'm talking, Ian. I'm talking. I got 18 years ago for Super Nintendo and PS1. Yeah, hit the like button if you went to GameStop. I mean, some of my better GameStop memories. I got a little beef. I remember one time, you know, I bought Halo 2. This is Halo 2. I'm buying it at GameStop. And I remember, I had some disposable income. You know, I didn't really have many bills. And I bought the game. I bought like the extra $10, $20 metal case. Back in those days, the exclusive version would only be like an extra 10 or 20 bucks. And I remember there was a $20 gameplay guide on the main missions. It's like, I threw it in. I remember it's giant line, right? It's midnight. There's a line of people buying Halo. I remember I heard some guy whisper, or he said to his buddy, that guy bought a gameplay guide. And I remember turning around like, who said that? I didn't say that. I was probably a teenager, but it really hurt my feelings. And I remember I got shamed by a gamer. The gamer shamer really upset me. But, you know, other than that, it is 100% good memories of GameStop. I take that back. I immediately regret that sentence. Who remembers them quoting you $1.70 for that game that you just paid $60 for? Maybe I'm exaggerating. Maybe it'd be like $3, $4 store credit. But like it would literally be, hey, this was new. It came out 2 weeks ago. What do you mean $4 store credit? That's a little ridiculous. And then you're like, all right, you're giving me $4 store credit. Well, how much is this used, by the way? I'm just wondering. They're like $39.99, and you're like, you're giving me $4. It's $39.99. How about you know, close that gap a little bit, folks. But, folks, that is all we have time for. I'm going to go ahead and end the stream. We got the basement about to go live. Appreciate everybody jumping in. We had a great time. I hope that helped explain what the heck is going on with this GameStop situation. I'll admit I learned a couple things from this video. I didn't realize Bain Capital was such a major player in this, the evil corporation that Mitt Romney used to kill Toys R Us. And, you know, I didn't realize how intermingled everything is and really how fragile this basket of cards is. So it looks pretty interesting what has happened with this GameStop. I'm probably going to go ahead. I got to like move some funds. I'm going to buy one share. I'm buying one share for the culture. Probably going to diamond hand it. I don't care if it goes, I mean, if it goes up to 10x, yeah, I might take some profit. But, you know, this is going to be one for the culture, folks. But that's all we got. Thank you for joining, everybody. It's been a great stream. Hit the like button on the way out. We are climbing and climbing and climbing. I know we don't have that many viewers for these 130 streams, but we're making this a regular thing. You're going to see me Monday through Thursday. So